Hello, we are looking at the Dow Jones Industrial Average on a daily time frame as a technical reference for the markets and where they were today and where they're going tomorrow. So looking at a daily time frame, today's reversal, today's price action is a very strong indication that we may see the market now continue higher from the range we've been in. As we talked, I believe 2 or 3 days ago, I believe it was on this day here, we had spoken, and the daily price action at that time, to me, given the reversal that happened on this day and the low retracement back into that bar, suggested that the market would continue higher. At least that's the message on this time frame, is what we concluded. I had also pointed out that even if the low of this bar had been taken out, that the market did not have far to drop because of the support created by the reversal on this day here. We did have a negative day yesterday that took out the low of the green bar, and prices have come down now to retest the area of this green bar. The reversal that happened today is a very strong reversal, retesting, and this is confirmation to me that we will likely see the market continue higher. So that is the analysis that I have of the daily time frame. Well, let's drop down to the smaller time frames to see if there's confirmation and the potential to enter a position. So here on the 4-hour chart, you can see we had, so this here was the very strong day that we had on the daily chart. And then this is the consolidation that remained in the upper 20% of that bar. Prices begun to move higher. They had a little bottoming tail. This suggested if it was going to happen to the upside, this was going to be it. But we followed by a red bar closing at its low, a gap down, and prices sold off hard. And although they sold off hard, it really did not do any damage to the trend, and support is sitting right here. And you can see this bar has had no follow through to it as a result of the support created from this area. We have now a series of narrow range bars with a range expansion closing up near its high. And the level of penetration back up against this red bar is definitely a bullish price action. So this is a successful retest of this area. So this time frame is telling me that tomorrow, as long as prices don't gap down or move down, if we do have a move down from here, then I would look for this low and this low to be taken out, and I would look for the markets to come down into the gap fill at this area or down to the major support pivot low at this area here. But as long as this bar can remain bullish and prices do not penetrate greater than 50% into this bar, it does suggest that the market will continue higher. So the 4-hour chart is in confirmation, is in alignment with the daily chart at this time. So let's continue to go lower and see what other clues we have. Okay. So here, I do remember the other day we talked about the prices consolidating and then breaking below the consolidation. They consolidated, they gapped up a little bit, but immediately crapped out, and we consolidated below the resistance again. This consolidation below this consolidation, we had a gap up that died again. Now, this time prices have come down and right into support, and you see the bottoming tails and all the tails in the whippy price action. This is why this whole pattern suggests to me that your money is best on the sidelines until things become more clear or control becomes more decisive from one side or the other. But with prices coming down and retesting this area and this pattern that we have, this wide range bar coming from this area here. Now this pattern is still not bullish to me until we overcome at least one area of resistance, and which it still cannot do that. And the area of resistance would be right up in here, about 26.3 or 26.4. If the market could, which is a 700-point move higher, but once the market could move 700 points and take out at least one pivot high, from that point is the point that I would absolutely become bullish, and I would look for the market to then pull back after that and then look to take another leg higher, and with a higher odds move is what I believe that would be. So on this time frame, it is very bullish to me and gives confirmation of both the other time frames. However, the only thing I do recognize on this time frame is that not one area of resistance has been overcome yet. So it is still a bearish pattern, and we're still in this bearish, immediate price action. This has been bearish since here. So it is still a bearish price action, but it's bearish within a bullish picture, a bullish trend. So prices are on major support, and we do have a wide range bar igniting from an area of narrow range bars after retesting support. So this does suggest to me that prices should move higher. And that's what I'll look for them to do. This is not the point that I'm entering a position yet, though. I want the market to do it. It has to prove to me that it has the strength. Because every time the market has attempted to rally each of these prior gaps, it dies and fizzles right out. It cannot even overcome the first area of resistance. So if from here, if the market were to gap up tomorrow, up into this area, or if we were to consolidate a little bit here and then show me higher, for intraday trades, if the market continues to remain higher here, you can trade it up into this area for intraday. But for any type of overnight trade, until the market can get up to this area at 26.4, I can't say risking your money overnight is worth it at this point. I would let the market rally to 26.4, prove that you can do it, and then from there give some type of pullback or sideways consolidation, and then look to take it higher for a higher odds move with lower risk to your money. So that's what I'm looking for on this time frame to the upside. And if this market is going to drop, this is going to be the point that it does it. If tomorrow is to be a gap down, if we were to gap below the lows of this area of support has been absorbed, has been dealt with by this sideways consolidation. And so if this area does not hold at this time, I do expect the market would have a significant drop to either this gap fill at this point, the gap fill at this point, or the major support low at this point here. So you see there's a lot of room to drop. So that's why you don't have to be too fast in getting into a position and trying to anticipate too early, because you could just wind up getting whipped around like a lot of the traders who are trading this mess are. So for the downside, if the market is to fail, if this bar is to be completely negated and the market drops below the low of this bar, or if there is a gap down tomorrow, that would be an indication that the market is going to drop severely, and it is a justification to enter a position on the short side and hold that position overnight, looking for the market to move down, a couple thousand points, potentially. So with that, let's go to a 15-minute chart and finalize it here and see what we have. And so to start, same thing with that very bullish day that we had that suggested the low is in the market, is this move that's here. We then have the sideways consolidation, prices breaking below, gap up, can't overcome resistance, prices sell off, they overtake support. Every rally fails to overcome any point of resistance, gap up, prices can't overtake resistance. They consolidate sideways. This was the one chance it had to overtake resistance. This is a very strong pattern that it had here. But the problem was this strong pattern happened under resistance. And that's why the pattern failed, in my opinion. If this pattern had happened, if the market had rallied to 26.4 or above and then did this pattern, this is a pattern that would have suggested higher prices. But the pattern happened below resistance. It could not overcome resistance, and the pattern failed. And again, prices overcame support. So they can't overcome resistance, but it does overcome support. So this is bearish price action. Prices accelerate to the downside, the wide range bar at the end, right into the area of support over to the left, and prices consolidate sideways. And you can see this was a bearish pattern here. This does suggest lower prices, but because support is so close, as prices took out the lows of the most recent consolidation, they snapped right back up with, with sharp reversals because of the support created by this area. Now prices have broken above an area of resistance within this small consolidation, so that's some strength that we see. This is a nice pullback. That's only a pullback of about 50% of this move right here, so that is strong. And prices are rallying, and now prices, bam, they overtake the area of resistance, the first area of resistance, this whole consolidation. So as long as prices hold here, as long as they give a minor pullback and then continue higher, or consolidate sideways and then continue higher, this should be the low, and we would see the market rally. Now, if this holds, this high will be overcome and the market will rally up to this high. But given the overall pattern on the daily time frame and everything that I see, I do believe that if this low is to hold and prices rally from this point, we will see the market move to a new high. The market will make it through this area, is my expectation. It may not, but this is the first target that I would have, would be 27,000, so 1,400 points higher. But I do believe that we would take the high out at 27.6, so maybe to go to 28,000 or so. That's what my expectation would be to the upside based on this pattern. So we'll see how that develops tomorrow and how this strong price action that we're seeing most recently, how it holds up, and if the market can continue higher. Like the previous time frame, though, you know, this market is looking like it's ready to make a move in one direction or the other in a big way. And this pattern that I see is also turning bearish. Now, if this low does not hold, just like the hourly chart showed, if this breakout is to fail, that will be the fuel, I believe, that is needed to ignite the market, to take out these lows and to take out this low over here. And we will see the market drop down into either this consolidation at the gap fill, the next consolidation, or the major pivot low, one of the three. And looking at the picture, looking at this, I think that there's pretty good odds that this market could drop, that we could see the gap down and see the failure of this breakout and for prices to move lower. So coming into tomorrow, I am finger on the trigger, basically, we'll say. And I'm looking for setups and waiting to see what's going to happen. But this is really a period where you can either go long to the upside, given the correct information happens, or short to the downside. I do feel that the market is ready to make a move, and so with that analysis, we'll see what happens tomorrow, and we'll talk soon. So good luck.